Welcome to another Business Ready for Sale podcast. I'm your host, John Denton, and today the topic is titled Finding the Hidden Profits in Your Business. And this is a chat that I had with Tony Monisse recently. And Tony, I credit with changing the direction and strategy of a business that I had 20 years ago to the point where we became so much more profitable and were able to sell the business and get a really great price for it. And it was all about finding profit in the business that my business partner and I, as the owners, just weren't seeing. Tony was referred to us by a very good client that we had at the time. And Tony put us through a process of looking at all the data we'd collected in the business, which in a training and development business is quite extensive. And then he put us through a whole series of what-if scenarios with the data. And it just opened our eyes to where the real profits were in the business and where we should be focusing and putting our attention. As a result of that exercise, we changed our strategy, our business strategy completely, and started to bring in more profit, grew the business, and 2.5 years down the track, we were able to sell it and get a great price for it. So I'm going to bring Tony on now and talk about some of the things that we learned in that process and some of the things that you can use to find the hidden profits in your business. So welcome, Tony. Welcome to the podcast.
Thank you, John. Thanks for inviting me.
Pleasure to have you here. Tony, I've already given the listeners a little bit of background to how you helped my business partner, Peter, and myself to re-strategize our business quite a few years ago now, to make it more profitable because we were looking to sell in 2 or 3 years' time. And so that extra profit helped us to get the price of the business up and, of course, gave us more money in our pockets as well. The way you did that was by showing us what I call the hidden profit in the business. And that's why I've called this episode Unlocking the Hidden Profit in Your Business. And really, it all hinged on knowing our numbers and some what-if exercises you went through with us. So, Tony, tell us a little bit about how you help businesses. And I know you've got something which you've upgraded from 3 eyes to 4 eyes now since we last had a coffee.
Yeah, thanks, John. Look, we work in a very privileged space. We get to work with a number of business owners. We work across a broad variety of clients and industries. And I guess in essence, what we do is we help businesses understand their numbers so they know where to focus to grow their business. Now, what we see is a lot of business owners don't really understand their numbers, or they're not presented with the information in a way that can help them understand their numbers. Just by helping them interpret their numbers, we're better able to help them grow their business and achieve their goals and the outcomes, a bit like yourself. Whether it's exit the business, whether it's providing the lifestyle they're seeking, whether it's planning for succession and bringing the next level of management into the business. And we also facilitate that through what we refer to as the quarterly business review meetings. So with our clients, we meet quarterly and review their numbers and use that as a platform to help them grow and achieve those goals I was referring to. And similarly in your case.
Yeah, it was interesting because both Peter and I came from a sales background, and again, it comes down to, you're right, business owners not understanding their numbers, but also making assumptions. And we had made the assumption that selling our top-end programs, the $5,000 ones, was the way to go. And our programs went all the way down to $999. And as a result of you taking us through your process, we came to the conclusion that the $999 programs were the profitable ones. You must come across that sort of thing a fair bit.
Yeah, and probably a lot easier to sell the $999 programs, John. Yeah, look, we do come across that a lot, and I think, what's the financial statements sort of tell you part of the story, but it's often sometimes the non-financial data, and it's how you marry the both the non-financial data and the financial data to really understand what's going on in your business. And often we look at financial statements in isolation, but they're not they're not matched up to sort of important non-financial data.
Yeah, the interesting thing was the cost of delivering the programs. The cost of delivering the $5,000 program was a lot greater. And obviously, as you said, we sold less of them than we could sell of the 900 one, it had the least costs associated with it. So it's understanding what it's costing you to deliver the service or the product as well.
100%. Yeah. I think ultimately, 100%. And look at, really, we should be looking at, revenues. Sales is a great line to look at. We all get excited about our turnover and how much we're turning over, but ultimately it's about profit. And I think, that's where probably, a lot of businesses, fall down, is that they don't really understand their business at a profit level. They might look at their business at a revenue level, at a sales level, but they don't understand their business at a profit level. And often, what we see in a lot of businesses we work with is that, there's some parts of their business that are making lots of money, and there's other parts of their business that are losing lots of money. And, when you add some of them all together, you get the result of the company. But, they're losing money in areas where if they understood that, they could actually take other actions. I think, a really good example I often talk about, John, is the banks. We all might remember back to the time when everyone had a bank manager. And, whether you're a mum and dad or you ran a business, you could walk into the bank and you could see your bank manager. And, the banks, probably 20 years ago, whatever, reinvented themselves and introduced automatic teller machines. And they worked out that, having mum and dad customers wasn't that profitable, and their real money was being made from business customers. And it wasn't that they got rid of all the business customers, the mum and dad customers. They just looked at a different way of delivering that service to those customers, and hence forced us to all queue up, see a teller, or queue up, or go to an automatic teller machine. And so then they diverted a lot of their resources to looking after business clients, which was a lot more profitable for them. So I think when you have that sort of understanding of your different segments and where you make money and where you're not making money or not making the return you should be, then you can start taking actions. And I think that's, that really was what precipitated some of the actions you did, because I guess in a sense, you understood that, we're making money. We actually do make money on these lower price courses because the cost of delivery is so much less, and we can fill a lot more places. Whereas, the bigger courses, we don't get as many attendees. They're a lot more expensive to deliver, a lot more harder to sell. And, maybe we should just focus in a different area.
Yeah, life became a lot easier when we focused on the $999 program, or $990, because we could sell it and run it all the time. It was a non-accredited program, but it was a lead generator then to upsell the other programs. So it served two purposes. It got our profit up, but it also got our leads and our upsell up as well. So
yeah. 100%. And I think that's I think the experience dealing with a lot of business owners is that they are sales-oriented people. Often they go into business because they're good at selling. They're very entrepreneurial. The biggest challenge is that they don't understand their numbers, and they really rely on people around them to produce those numbers. But the numbers, often just not presented in a way, they can be quite intimidating. Another client that you and I know quite well that we've worked with and done some work with, who had a civil construction business that he started out at the back of his ute and grew quite substantially to, in excess of a couple of hundred employees. I must have, when we first started working with him, it was like dealing with a guy that, in grade 5, but didn't know how to read. And all he, what he did have was he had he knew how much cash he had in his bank, and he knew what his sales was, his revenue, but he really everything else in between he struggled with. And again, I think that's probably another important part of this. It's about education too, John. So I guess in it's not only unpacking the numbers, but it's also about education and sharing that knowledge. So obviously yourself and Peter were on board for that, and took that on board. And I think that's probably sometimes the biggest challenge for a lot of business owners, is that it is quite intimidating. It can be quite intimidating for a lot of business owners looking at financial statements. And I think, accountants have done a really good job of making it very difficult for business owners to understand financial statements. They are really not presented in a way to be understood. Helpful for lodging tax returns, helpful for giving to the bank, providing information to the bank, but, really terrible for most business owners. I mean, often when we work with clients for the first time, I look at financial statements and I honestly do not know what is going on or cannot interpret them. I'm trained, so I feel for business owners. I can only imagine it's just a black box, and they just look at the bottom line, look at the profit and loss, or they look at how much cash they've got in the bank.
Yeah,
I don't know what your experience is, John, but certainly I see that.
Well, yeah, I mean, particularly when I was business broking, but even now when I'm looking at, the first thing I look at typically is the financials of a business when I'm helping a business owner. And it still surprises me, although it shouldn't, how little attention the business owner has given to the financials. They haven't set them up nicely to give them a good indication of what's happening in the business, and they don't look at them, except from one year to the next when they have their one night stand with their accountant to get their tax done.
Yeah. And which is such a missed opportunity. I mean, there's so much valuable information in there. But yeah, like you say, I mean, often, the financial statements are updated once a year. They're often waiting for the journal entries from the accountant from the prior year, sometimes 2 years. And they're, to me, it's like your navigation panel. It's a bit like, you're driving a car, but the panel doesn't work, the odometer doesn't work, or it works intermittently, or, we don't know the fuel gauge, and like, would we head out, with an instrument panel that didn't work? Would we head out on a boat with an instrument panel that didn't work? But, so many of us drive our businesses without an instrument panel, which is quite scary.
Yeah. I mean, a lot of it comes down to the personality. You talked about, how people get into business. They get into business because they're good at something. And typically a business needs good financial management. It needs good sales and marketing. It needs a good product or service. That's a given, and good systems and processes. And a business owner, because of their personality, background, training, they will be good at one of those things. So they might have got into business because they were good at sales, but they don't understand financial management or systems and things like that. So that's where they need to bring other people into the business to support them. And that's where you come in. I think in a lot of cases, certainly with us, we were focused on the sales and the marketing and delivering the product and service, keeping the customers happy. But apart from, we were looking at the financials, but you dug deeper into the financials to make it more meaningful. Yeah. So that's a service that I see you guys provide, is that financial management for the business owners who don't have that aptitude or interest, if you like.
Yeah, I think it's, I guess the most powerful thing is it brings insight. And, if I use my eyes, the four eyes, I guess, the first is, insight. So we need insight from that financial information. So how do we present the information in a way that provides insight? The most powerful thing out of that is it informs strategy. And like in your case, it informs strategy. I mean, it became apparent, what what needed to be done in the business to achieve the outcomes. Because once you understand those drivers of sales, the drivers of profit and the drivers of cash flow, the dials to turn. Because often people are focusing on the dials that don't make much difference. They're focusing on the top. So we really want to understand the dials or the levers that are going to make the biggest difference. And in your case, it became very apparent that, focusing on selling those smaller programs which was also, had that added benefit, like I say, of bringing people into your business, which you could on-sell or upsell, the next program, was valuable. And I think, so, you got the insight, informed strategy, where to focus. And then it's about implementation, so, or execution. And so, as you would know, John, so it's how do you have that discipline to implement? And obviously, in the case of you and Peter, I remember, you were right onto it. You had that energy, you implemented, you held each other accountable. But, often that sometimes can be the biggest challenges to implement. And I'm sure, it's probably a topic for another day. And I think my fourth I that we were talking about was iterate. So, my experiences working with businesses is when you start building these models and understanding the drivers, you don't get it right first time. It takes a little while for those, even I recall with yourself, it was several meetings before the insights became apparent of what needed to be done. But it's an iterative type process. You learn more, you go and do things, you get more information, and you build this model. And once you build the model, it becomes actually quite powerful. And so, it's a continuous feedback loop.
Absolutely. In my engineering days, it was called plan, do, check, act. You planned what you were going to do, you did, you checked the results, and then you took action to get on to the next cycle.
100%.
So
100%.
Yeah.
So I think that iteration is really, really important. And it's, I think it was interesting just coming out of this last period with JobKeeper, and like a lot of businesses obviously got JobKeeper. Certainly in the WA economy, a lot of businesses were still relatively profitable, even with JobKeeper. Obviously qualified initially, but still continuing to get JobKeeper for the period thereafter. But I think, again, trying to isolate. We had a number of experiences with clients where we really need to, you have these abnormal items in financial statements that, you look at it and you go, oh, yeah, you're making profit. And, you would know certainly from your broking experiences that, often when we look at financial statements, they don't have any allowance for owner's wages in there. They don't have any allowance. Often if they've got own a building or it's a related party, there's no rent in there. So a lot of things, there's often no annual leave, holiday, no leave provisions booked. So often they're looking at their profit and loss thinking they're making money. And we just had a recent experience with a client where we booked all their annual leave or their annual leave provision for the first time. And, it actually makes quite a substantial difference to the overall profitability of the company. I mean, they think they're trading and doing swimmingly well, but they've never ever taken up the leave provisions, annual leave. Or, often there's been no allowance for the owner's wages in there. So they're not working on the basis that, if I need to leave this business one day and I want to put this business under management, then, what is the profit going to look like if I actually had to employ someone? And I appreciate that might get added back for, the purposes of valuing the business or selling the business. But I think it's also really important to look at in terms of, I might have a really good business here. Why don't I put it under management? What does it look like? Because you do need to, put some value on the wage of the owner.
Absolutely. Very important when it comes to the sale of the business, as you said. So getting the accounts set up right in the first place, and so that it does become your instrument panel and tells the owner what they need to know in the business.
Yeah, and I think so, 100%. And I think it's really important, keep it simple, John, because I think there's so much complication in financial statements. And so, I know certainly, one of the things that we do is help clients build models of their financial statements. So to simplify it, I think the part of the reason we're in business is that most financial statements are so complicated. And so a lot of our role is to actually help simplify it and distill it down to the essence and, what is the really important stuff to understand. And I think, equally that applies to the balance sheet. It's, most business owners do not look at their balance sheet. I should do a survey of who looks at their, you've prompted me now that, I should actually just survey who looks at their profit and loss, and you'll get, you might get a few hands. Who looks at their balance sheet, you'll get even substantially less. And then who actually even looks at their cash flow statements? And I suspect you get zero. But, balance sheet's really interesting because, again, there's so much gold in that balance sheet that just does not get extracted from the financial statements. What we see a lot when we're dealing with clients is, they've got things like, their working capital, things like their debtors, their stock, their creditors, which are, and again, you would know from a broking perspective the importance of working capital and understanding working capital. But often that gets mixed up with all sorts of other things. It gets mixed up with loan accounts. It gets mixed up with amounts payable to the tax office. It gets mixed up with investments. It gets all mixed up. So trying to interpret the balance sheet is it's a challenge enough for us. A business owner is it's going to be tough for a business owner. So that's where I think, seeking that sort of advice or, interpreting the balance sheet is absolutely critical. Because what business owners need to understand is cash flow is effectively the profit and loss plus the balance sheet equals cash flow. So to understand cash flow, not only do you need to understand the profit and loss, you need to understand the balance sheet, because you will never understand cash flow without understanding the balance sheet.
Do you run courses on this kind of thing?
Yeah, we do. We run, we run workshops. Yeah. So I know we've talked about this for some time, John, but, we run a 2-hour workshop. We call it Growth, Profit, Cash Flow. So I'm more than happy to share the details of that, where we go into this in more depth to help business owners understand the drivers of sale, their growth, the drivers of.
Yeah, I think there's a real need for those kind of workshops and the education for business owners around their balance sheet and profit and loss and cash flow, and again, with getting back to the buying and selling of businesses, when people are buying a business, they often don't think about working capital, for instance. That's an additional cost on top of the price of the business. So if you might be paying $500,000 for the business or $1 million, but then you might need another couple $100,000 in working capital. And if the buyer doesn't take that into account, it can be quite an issue.
Well, I don't know what from your experience, but I would imagine most business owners don't understand working capital or not familiar with the concept.
So good. So we're opening up an opportunity for all these courses for you to run.
Working capital is super important. And look, the most important thing is that I think also with this is it's not only important for the business owner to understand it, it's important for key employees in the business to also, understand the financial position of the company, because often they can help implement a number of the strategies that come out of this. And, an example is a client we worked in the civil construction space. And once they got, they had their project managers sitting in on the meetings. And once they understood the importance of working capital, it changed the way they ran their business. All of a sudden, they started looking at, not only did they look at the contracts they were entering into, but they looked at the payment terms on the contracts. Yeah. They started looking for mobilization fees. They started looking for, 14-day billing cycles rather than 30-day billing cycles. They started talking to their suppliers and saying, look, hold on, we've got this contract. We want to bid for it, but if we bid for it, we need, longer payment terms from you as a supplier. So all of a sudden, like if you just share that information with the business owner, all that rests on the shoulders of the business owner. It's a big responsibility, but if you can bring your key leadership team into it, you just get so much leverage from sharing that information and highlighting those key elements. And look, most of the key, the leadership team in a business, other than the person that looks after the books, the financial person in the business, most of them don't understand the financials either. But if you can help educate them, you just get so much more leverage and create so much more opportunity to, implement, a number of these strategies.
Yeah, I think there's a reluctance amongst a lot of business owners, particularly smaller business owners, to share the financial situation of the business with employees. One of the things, going back to when I was an employee and running a branch here in Perth for a company, I used to share the financials every month with the team, with everybody, from the receptionist all the way through, and explain what was going on with the business. And we were a branch of a national company, but we were a profit centre in our own right. And we were struggling a little bit when I first started in the branch. And one of the things that came up when I showed the profit and loss was the amount of overtime payments.
Mm.
And one of the engineers put his hand up and said, "Oh, well, I can help with that. Instead of me getting overtime, why don't I take time off in lieu, or take time off instead?" And I said, "Oh, well, that'd be a good idea. Yeah, that would save us a few bob." And then a couple of the others said, "Well, I'd rather have time off as well."
Yeah.
But if I hadn't
Perfect.
shared and explained the situation, they would never have thought of that.
100%. And possibly if you hadn't taken that initiative, that idea may never have, obviously come to you necessarily either. So, I think it's, for an accountant, one of my favorite expressions is 1 + 1 = 3. I think it's that chemistry that comes from bringing other people into the room, and the insight that comes from that can be so powerful and so valuable. And we see it so often. And so many business owners miss out on that opportunity. I think that, just coming back to your point, look, for some clients that we work with, we don't share the full financial statements. For various reasons, owners they are reluctant to go, right down to the very bottom line. But what we do share is what what that leadership team has control over. So, we might take it down to a gross margin line. We might take it down to we might show key things like stock, debtors, working capital, things that, that the leadership team have some influence and some control over.
Yeah. And talking of the gross margin and gross profit, I mean, that is something, again, that I see financial statements where they haven't even been taking that into account. It's just income and then expenses. So the actual cost of goods sold is not shown on the financials. Yeah. And again, it comes to you've got to educate the business owners or someone in the business to put the information in the first place. If the information is not entered correctly or the right information, you're not going to get the right information out, are you?
Well, I think that's the biggest impediment I see to most businesses is the chart of accounts. It's created in a way, it's been started by someone, and then someone else has picked it up and added some more stuff to it, and then the external accountants got hold of it and added a few more accounts in, and by the time it gets to the business owner, it's often a dog's breakfast, and so no one's got any idea what's going on. And so this is why it's just so important. It's so important to distill that information down into something that is understandable, because typically the way that it's presented is it's not understandable.
It's
not presented in a way that you can. It's not presented in a way you can make decisions, and often it's inaccurate. It's we see so many businesses that don't do stock takes. So we've got a client that's doing unbelievably well. I mean, they were $6 million business when we started working with them. They'll turn over in excess of $20 million, and that's happened in the space of 4 or 5 years. And that business did not break down. It was when we first started working with that business. It was the accountant journal entries hadn't been posted for the last 2 years. The stock number, when I did the stock calculation, represented about a year's worth of stock. But then I confirmed it with the owner that was in fact incorrect, and the stock was actually a quarter of the value that was recorded in the balance sheet. They weren't doing quarterly. They weren't doing any stock takes. So now that business does stock takes regularly. They do gross margin analysis on jobs. Things that but it's taken time to implement that. But now they've got this information that they can use to make decisions.
Accounting for people's time in the cost as well, not just necessarily material costs. But getting back to stock. I've seen businesses where they've manipulated stock values in order to get loans from banks and things like this. And after a few years, it bears no resemblance to the real situation. And then when they come to sell the business, it becomes unsaleable. Yeah. Because the stock in the figures just doesn't match what the reality is. And that becomes a real problem. That can take quite a while to sort out. And then the other one is where businesses accumulate a lot of unsaleable stock, which is still on the books. You know, I think business owners don't see the importance of getting that right and keeping it clean.
Yeah, I think so. Look, I think, I guess you've got to look at what your motivations are, you know, to run your business. And look, the clients we work with in terms of helping them get organised and putting in place these processes and the reporting, and you know, it's all driven around like maximising the value of the business. I mean, that's the goal. Like, if you know, we either go for it or we don't. You know, you can't sort of half do it. You know, there's lots of other measures. There's a lot of other measures you can do to reduce tax, and you know, obviously there's some pretty generous concessions out there at the moment with stock plant, plant and equipment write-offs, etc., that are available out there at the moment. But also, you know, look, with stock, yeah, I agree. You know, one of the things is that, you know, write off dead stock. You know, there's opportunities there. I mean, opportunities to take advantage of that and get tax deductions on that. You know, if you haven't sold that stock, you know, in 12 months, it's probably highly unlikely you're going to sell it, you know, in post that period. And that's not to say you shouldn't try and sell it, but you know, take the deduction and focus on strategies of how you can actually realise that stock that's greater than 12 months, for example.
Yeah.
And I think the other thing too, John, you mentioned wages. I think that's, you know, often one of the things that we notice when we see clients for the first time is that they don't split out their wages. Like you say, I mean, often wages is just one line, one lump sum figure in the P&L. But those wages could be made up of sales wages, you know, salespeople. It could be made up of admin people. It could be made up of people that are actually part of cost of sales, you know, part of the delivery. So again, we're missing out. There's this enormous rich information that's in there, but often business owners, you know, when you split it out, you actually realise that the business is actually, you know, as I said earlier, losing money. I mean, in certain areas of the business, we've got an interesting example of a client we're working with at the moment. And it is doing swimmingly well. If you looked at those numbers at a high level, it is doing unbelievable. I dare say it has a contract at the moment that is fortuitous as a result of the government restrictions that are in place. But what we found is when we actually took that contract out, the core business is not making money. Now, if you look at what is happening there, you know, a key strategy or key focus is how do we make the core business profitable? Because that's not going to last forever.
Yeah.
But again, if you look at the way the numbers are presented, it looks great.
Yeah.
But it's dependent on one large contract.
Yeah. When we look at businesses, we always look at the spread across the clients. And, you know, if a client's more than 15% of turnover, then it's a risk. Because you lose that client, you're losing a big chunk of your turnover and probably your profit as well. And if you've got one major client or two major clients, then, yeah, the risk level is just going up. Yeah.
Yeah, and look, you touch on a really important point, John, and I think I would call it segmentation. And very few businesses segment. So you can segment your business by customers, categories of customers. You can segment your business by products and services that you offer. You can segment by geography. And I can give you stories around all three. You know, there's a labour hire firm we work with, and you know, again, very profitable. But what we found is that their margins on the dealing with the major mining companies were substantially less. Even though we're getting a lot of volume, their margins were less, and their payment terms were stretched out.
Yeah.
So the actual return they were making from those, you know, the major mining companies was actually far less than what they were making on the smaller industrial businesses that they dealt with, where they were getting higher margins and the payment terms were much more favourable. But again, you know, it's that sort of analysis that needs to be done to better understand and to understand the strategies that, you know, how you can optimise the outcomes from those different customer bases.
Yeah, which leads us into KPIs, key performance indicators. You know, yes. A lot of businesses don't set up KPIs, and it comes back to what you said at the beginning about the financials and the information, the informed part of your four eyes. It's getting the right information and looking at the right information to give you that instrument panel. And I know when we've talked, and I talk to business owners as well about KPIs, but they find it difficult to understand the difference between lead and lag KPIs. To me, a lag KPI is, well, it's telling you what's happened. And again, financials typically tell you what's happened. I always think back to, you're probably not old enough, Tony, but remember when cars, instead of having fuel gauges, instead of having gauges, they had lights, and they would have a light which would light up when the oil pressure was too low. It was a red light. I remember a mechanic saying to me one time, we call those too late lights, because by the time the lights come on, the pressure's been so low, your engine's already damaged anyway.
Yeah.
So it's a too late light. But so, explain a little bit about lead and lag KPIs.
Yeah, and again, I think, you talk about like lag, and often it's too late. Looking at the financial statements is often too late. And that's where we got to look at the lead indicators in a business. And, often those lead indicators can be, especially around sales. It could be sales pipeline, sales funnel, what's coming up. It could be the number of leads that we've got, number of sales leads we've got in the pipeline at the moment. So there's a client we work with in the online space. And so we actually track their sales pipeline all the way through from, inquiries to leads, to initial assessments to converted client. And so we want to know where everyone, so that's a really important lead indicator for that business. The sales are the lag, and I think really important lead indicator from a financial perspective is that sales pipeline. So many businesses don't prepare, don't look at their sales pipeline, or don't look at that as a lead indicator, in terms of, what is in the pipeline? Have we got enough work in the pipeline? What are we doing about that? It could be the number of, again, every business is different, but, how many tenders we're putting in, how many bids we're putting in, just keeping track of that can be really, really important. I think the other thing too is that, we talked about segmentation, we talked about KPIs and the importance of lead indicators versus lag indicators, which are things like sales. But I think it's also the ability to look backwards, John, and it's the ability to look forward, or dare I say forecast. And so few businesses, and this is where if you have a grasp and measure those lead indicators in your business, you can actually use those lead indicators to forecast forward in your business. And better understand what the future might look like in the business, so that you are, there's a future orientation to the way, that information is presented. And again, it's another, important point that we focus on with our clients is, once we understand the historical, then we can project forward. And if I go back to, your situation, when we were dealing with yourself and Peter, once we built those models and understood, the various courses, the what sort of, I guess, was it, I wouldn't say occupancy, but utilization, what sort of, if the course was designed for 20 people, were we getting 10 in there, or were we getting 15? What would you call that measure, John? It was like a
number of participants in each program.
Yeah, so like a utilization type measure.
Yeah.
Right. So what became apparent, as I recall, with dealing with yourself and Peter, was we need to get that utilization up, because we've got this fixed cost. It doesn't matter whether we have 5 people sitting in that room or 20, it still costs the same amount of money. So the easiest way to increase our gross profit is to get that, 25%, instead of running lots and lots of courses and only having them sort of quarter full or half full, let's run less courses and get more in, because the cost of delivery doesn't change. And we can actually increase our gross profit. So, again, we're better able to forecast out, because then we can say, okay, well, this is historically where we are. okay, we've operated this business at a 50% sort of utilization on our courses. Let's now focus on getting that up to 75%, and what does that look like? And then let's see what the impact is of that on our profit, and then ultimately the impact of that on our cash flow.
Yeah, no, that what if exercise you went through with this was fantastic, where we looked at all the different scenarios. I tend to call it scenario planning, but it's what if. Yeah, I mean, it just totally enabled us to develop new strategies for the business and make it more profitable. And yeah, we sold it and got a good price for it.
Yeah.
So, thank you for that, Tony.
That's all right. Oh, good outcome, John.
Tell us how you start with a client. We're going to have to wrap up in a minute, but how do you get started with a client, and how can people contact you, find you, etc.?
Oh, look, I guess the first thing is for us is to really sit down. So initially is so how do we start with a client is to really understand what their goals, objectives are, what do they want to achieve, what are their key frustrations, what are their challenges they're dealing with. So really very qualitative. It's just have that in an initial meeting. Where they're frustrated, what are the challenges. Once we understand that, then typically we, with their permission, give their permission and sign a confidentiality document, is to get their information for the probably last 2-3 years and do some initial analysis on it. And look, we normally do that as just part of our investment, because I guess ultimately we want to be comfortable that we can help that client and we can add value. And then we would typically present that back to the client, and if they are comfortable with that, then we can proceed to engage with them. And typically the way we work, look, I guess a couple of key things there. Typically the way that we work is we set up a program that runs over a 12-month period. Typically that would include, helping with the analysis of the financial statements. It would include that quarterly meeting that we talked about, where once a quarter we would review the financial statements with them and forecast, and help them build dashboards of some of those lead and lag indicators that you talked about. So that's all part of that sort of process. So we would scope that out and present that. So effectively, we're like an outsourced CFO, for private businesses, and we work quite closely with. Often businesses have got these fantastic resources inside. They've got great bookkeepers, great accountants, but often they haven't been given any direction. And once we start giving them some direction and set them up and give them tools and templates and all sorts of other things that we share with them, then we start getting all this wonderful information out that, has just been trapped and locked in the business for so long. Yeah, I think, that would be the starting point for, working with, any businesses. First of all, see if we can help them add value, and then do some sort of analysis to, as you said in the topic, how do we where are the opportunities to unlock profit and cash flow? Look, in terms of contacting us, John, first place we go to our website, Brent Knowles WA.
Okay, so Brent Knowles WA, as in BRENTNOLLSWA.com.au.
Yes, Brent Knowles WA, BRENTNOLLSWA.com.au.
And look for
more than happy to catch up with people for a coffee.
That's fantastic, Tony. Anything else you want to add? Anything we've forgotten?
No, I think we did well, John. Covered a lot at the moment. I think the biggest challenge, obviously, out there for a lot of businesses, we're in a fortunate part of the world. I don't know what the next few months might look like, but at the moment, anyway, we're sort of quite fortunate. Obviously, a lot of businesses are dealing with labour shortages at the moment. So I think probably the key thing that we're finding with a lot of clients that we're working with is focus has become really important. Is what are they saying yes to and what are they saying no to? The biggest challenges for businesses, I guess, what we're seeing with the clients that we work with is being very selective about what work they take on, because they realise they're limited in terms of the resources and the capacity they have to deal with that work. And I think it comes back to what we talked about earlier, is it's not just about revenue, it's about profit. We might be better off having some less revenue and making more profit in the current environment. Is focus, and how do we become more efficient, and how do we leverage more to take advantage of the opportunity?
Yeah, okay, that's good advice. And I'm sure everybody will take that up and hopefully got some really, really good tips out of this session. So thanks again, Tony. Thanks, and bye for now. Some terrific stuff there from Tony. I can't say more than what I already have really about how Tony helped us, my business partner and I, to transform our business and make it more profitable and be able to grow it, make it more valuable in the marketplace when we came to sell it about 2.5 years down the track. You know, Tony covered his 4 I's: insight, knowing your numbers, but knowing your numbers in a meaningful sort of way so that you know where the profit is in your business. Then informed. So once you're informed with the information about your numbers, then developing an informed strategy and setting goals to achieve what you want to achieve in the business. So in our case, as a result of learning what the numbers were telling us, instead of going out and trying to sell the top end products, my business partner and I went out and sold the lower end products, which just became so much more profitable. It was an easier sell, and it helped us to on-sell and upsell the other programs that we had as well. And then the third I was implement. You know, unless you actually do it and make the changes that the numbers are telling you to make, then obviously you're not going to progress. And iterate. You know, Tony made the point that, you know, not everything's going to work all of the time or every time. So you've got to make the changes, the informed strategy, and measure what's happening. Tony was very strong on the need to have KPIs and have measures in the business. So when you've implemented your new strategy, watch the numbers, see what's happening, and adjust. Keep going around the cycle. I call it the plan, do, check, act cycle. It's an old engineering cycle that we used to use in the computer industry many years ago. But you do that in business. So you make the changes, you measure the results, and then you adjust accordingly. There is no perfect science to all of this. Just do the best you can. And with that, I'm going to wrap up. If you want to know any more from Tony, go to brentknowleswa.com.au. If you want any help with getting your business ready for sale, or you'd like a business ready for sale assessment, then you can contact me through johndenton.com.au or email me at john@johndenton.com.au. And I've got lots more really interesting people lined up for podcasts, so stay tuned. Press the subscribe button, give me some feedback, and I look forward to you being on the next podcast. Bye for now.